S&P 500 was able to get to a new all-time high intraday right here to 441.89, but it failed to close at a new all-time high. It's not too bad. SPY is still trading above all our moving averages, including the 5-day moving average. So this chart is still looking bullish, as y'all can see in the past. In a strong bull trend, SPY likes to move along the 5-day moving average, which is currently what it's doing. Okay, we got a nice breakout from the bull flag right here. Very nice. Okay, we had a couple of red days, bounces off the 5-day. We creep down, got some traps here for the bears. Now we're back up, not at all-time high, but back above all our moving averages. So SPY is looking really bullish. If you watch my video yesterday, I did mention I have a 443 price target. Okay, so there's a chance that SPY could continue to melt up here, okay, to finish strong in July. I was expecting some type of pullback with SPY to build some string heading into August. But we're not getting that pullback just yet. But we want to take a look at the VIX. Remember, VIX inverses the SPY, like I always say. However, VIX is making higher lows. All right, so while SPY is continuing to creep up and go to new all-time highs, or trying to, the VIX is not cooperating with us. It's continuing to make higher lows. So this is a sign that there could be some volatility heading our way. Okay. So we'll see what happens. This volatility could be for August, if it continue to creep up, and we could get a pullback soon, a big pullback if VIX continue to move up. It's trading above. It closed up just above our 20-day moving average, also above our 50-day moving average. So we like to see the VIX be below those two moving averages. Very important, because this represents fear in the market right now. We're seeing some signs of fear, okay? So tomorrow is Friday. We'll see if we get a VIX crush Friday, where the VIX just gets crushed and drop below our support line here. And if we can get it back below the 20-day and the 50-day, very, very good sign that SPY will hit my price target of 443, maybe to the 444 range, okay? Remember, this red area is our area of liquidity. You guys understand? Areas of liquidity. Here's an image that explains what an area of liquidity is, okay? So we got the support levels here, and then under the support level will be a cluster of stop losses, and eventually the market makers, they will look to stop out all the stop losses before heading back up, okay? So this is a support level example, but it also works for resistance, okay? So, wrong chart. So we have this resistance that's been building up since May for quite some time now. All right, so that red area is possibly where the stop losses are building up for those who are short in the market. Okay, so I doubt the market makers will build it up for no reason. Okay, when we're this close, I believe we could go hit this before we start getting a major pullback around the 443, 444 area, maybe even 445 to 446. All right, before we get a major pullback. Okay, so with that being said, I am still bullish on the SPY, although we gotta be very careful. Definitely keep an eye on the VIX. I want you guys to pay close attention to it. The VIX can get back under 1757 to 1750. Under 1750, very good sign for SPY to head up higher. Okay, if VIX continue to stay above 1750 and continue to head up higher and make higher lows, not a good sign for the SPY. Okay, so this is a bearish divergence between SPY and the VIX. You guys following me? All right, so bottom line, I'm still bullish on the SPY, but I would like to see the VIX get back below 1750. All right, so this is be careful territory. All right, this is not the time to enter. Gotta be very careful. Make sure you identify your areas that you feel comfortable accumulating at. Okay, so moving on to the triple Q. Now triple Q for the triple Q for the third day in a row has failed to close back above our 5-day moving average. Now yesterday and today it got above the 5-day moving average intraday, but it failed to close there. This is some very bearish signs, guys, and it's also more down in the post market. Okay, so let's take a look at the 4-hour chart. I like to use different time frames. Small time frame I use is probably the 30-minute. Anything lower than that, I won't even touch it. So if we look at this time frame, right, 4-hour chart, we had area of liquidity here building. Let me move these moving averages. It's trading below our 20-day moving average, right? So it's starting to look bearish. Bearish strength is building, okay? But look at this. We had this right here, this resistance right here that the market makers broke over here, okay? So above it, all this area was area of liquidity, okay? They broke above it and they pushed it right back down. This big candle is institutional candle, okay? This candle right here that took out the resistance and broke out, that's institutional candles that are at work, all right? So this is a vector candle. We want to look at the last buying candle, the last candle that was buying, that was pushing it to the upside, and we want to look at the 50% retracement of it, where it opens, and the 50%. Okay, so that's how you would trade vector candles. Okay, so we look at the 50%. I usually just do the body. All right, let's bring it bigger. I usually only do the body because that's where most of the volume is. Okay, so we want to get where it opens and also the 50%. All right, so get this out. So as you can see, Triple Q came back to our vector candle territory and then started getting rejected down there. So guys, this is looking bearish right now on the 4-hour chart, okay? Now it doesn't mean that this is the bear market is back, okay? The bear market is not back just yet, because we need to identify where our support levels are at. All right, obviously this white line has been a strong support level. I would look to enter around there. Obviously just below the white line is our area of liquidity where stop losses could be potentially building up. All right, so around that purple area, that's where I would look to enter. Okay, we get our moving average. We got the 5-day, 50 days all the way down here. So I would look potentially enter just below the 20-day moving average, right? Because in a bull market, 20-day has served as a very important. It serves as a very important support line, all right, and it helps us measure the bullish strength. And a few days ago, it did bounce off the 20-day, so you know you expect it to go up higher. But right now, it's looking a little funny, guys. We're not closing back above the 5-day, so we could get some bounces off of these levels right here, okay, around the 358 level, and if it goes even further, we could get a bounce off the the 346 to 348 level. Okay, but we want to be very careful at these levels, because remember I mentioned that Triple Q is following the Wyckoff method distribution, okay, and we're still at the UTAD phase where we're expecting a very higher high, a much higher high, okay, but we don't know where the top's gonna be. Never want to call a top on a strong bull market, but we are seeing some signs right now. But of course, if Triple Q decides to break 367, that will change everything, right? But it's technically speaking, this is still a bull market, okay? The moving average is all stacked above each other. It's just that it's showing some weakness, okay? But if Triple Q can get back above that 50-day, that 5-day, we can head back to all-time highs. But right now, gotta be very careful. So I would look to accumulate at these levels, okay? So remember, according to the distribution of Wyckoff, a good sign that we are at a top is if Triple Q drops back to the BC level, which is around 338, and bounce back and it starts getting choppy, okay? So keep that in mind. I'll show you the schematics right here. Here it is, okay? That's where it starts getting choppy before a nice drop, okay? So we may see some bearish movement into August, September, October. Keep in mind, August, September, October is usually a bearish part of the season, even for the tech sector. All right, check in the past data. Okay, so right now, gotta be careful with this. I'm still bullish on it. I will be looking for buying opportunities, but of course, make sure you respect your stop loss. Triple Q has a lot of reasons why it could drop back down. All these white areas, these are all areas of imbalances that has yet to be filled, okay? And according to distribution of wick off, it is possible that it drops that far down, okay? But don't jump the gun yet. This is still a bull market, so it's still a buy the dip market, okay, until we see otherwise. And what do I want to see if it's a bearish bull? If it starts getting bearish, well, if it drops to a BC and UT level, of course, we want to see the 5-day crossing below the 20-day, 50-day, you know, for some death cross. Well, the death cross is 50-day and 200-day, right? But you guys know what I mean. You want to see the 5 and the 13 below the 20, okay? That's when it starts looking like a bearish chart, okay? But right now, it looks just like a bullish chart, okay? So, I'm still bullish on QQQ, but it doesn't mean I'm entering at this level. Be very careful. And watch that 367 level very carefully around where the yellow area I put. 367 to 368. Can we break that? Can QQQ break that range? If it does, we can go up to the next price target that I have at 371. Alright? Moving on to ARKK. Where is ARKK? Gotta bring up ARKK. Here it is. ARKK, we had another green day for ARKK. Very happy that I accumulated below down here. Remember I mentioned to you guys. Now despite this green day, ARKK failed to get back above the 20-day moving average. Okay, I told you guys if we get back above the 20-day, then it will definitely start looking really bullish. Okay, then it'll be a great sign that our third wave is here of this fifth wave, and taking us back up to 142. Okay, until then I will be accumulating. My buy zone is from the 110, maybe 109 range, all the way to the 117 range. Okay, so I'm still bullish on ARKK, and like I said, that's my buy zone, and I will buy it up until we get to this gap right here. All right, we had a big gap right over here for ARKK. Hopefully it gets filled. I'm confident it will get filled. Alright, so that's ARKK. Still bullish on it. Moving on to Bitcoin. Alright, here's a quick update on Bitcoin. I told you guys the last couple days, this is not the time to buy. We don't buy the tip, we buy the dip. Now I said it's following wick off. I've been saying following wick off for months and months now, okay? And we finally got it to test this AR level. Over here we got it just above the AR level. Alright, now we checked the wick off method. We were following accumulation, right? We should be around this area, and we finally got that little dip just above the AR level. Okay, now after, if we're still in phase B, of course, we should start moving down to the downside. We could possibly get a new low, or we go down to a previous low and get choppy. Either way, there will be some really, really juicy buying opportunities, okay? If it does break the 443 level though, 441.3 thousand level, it could be a sign that we're actually up in this level, okay? So if we do buy the dip, guys, we are back in a bull market for Bitcoin, okay? So watching these levels carefully. If it breaks the 41.3K, very bullish. If it doesn't and failed, then I'm bearish for the short term. I will look for new buying entry. Of course, the ST in phase B is at the 28.7K level. So if the spring comes, it's obviously going to be lower than that. So I'll be accumulating around the 26 to the 28K level. All right. And if it doesn't, and we only get a last point of supply, which is accumulation schematic number 2, I'll definitely be looking to accumulate around this imbalance right here, around 31K. Okay. So basically 31K to 26K will be my buy range. All right. If we start moving to the downside. Okay. So with that being said, I'm not neither bullish or bearish. I'm waiting for Bitcoin's price action to tell me what it wants to do. Okay, so I'm definitely watching the scenario carefully, and I hope you guys do the same. All right, so that's all the indices and crypto that I like to cover. The next section will be for the viewers that requested, that like my technical analysis style. Just remember, I am not a financial advisor. I'm just doing this for educational purpose only, and it's fun, entertainment purpose. Okay, so the request was for Amazon and Apple. I'm gonna check Amazon first. Okay, so Amazon is starting to look bearish. Okay, here's why. You might not like what I got to say, but I'm just going by the charts. All right, don't shoot the messenger. So we have it up here. Let me move these moving averages. just know that it's trading above the 20-day moving average, okay, which is very not very bearish, because it is still above the 50-day, but it's pretty bearish. All right, so we check this. We got this uptrend right here, right? And of course, the blue area is the area of liquidity where stop losses, retail trader stop loss could be clustering up, and market makers will look to take out. Okay, that's the blue area of liquidity. Now we got this 5-way, way 1, 2, 3, 4, and all the way up to 5. We got this top right here. Now it looks like we are in a correction. When we get the correction, is usually an ABC correction to the downside. So we got this A, B, C. Now the target for ABC corrections are usually the 61.8 retracement, right? Which is right here at 3429.56. Okay, you see that right there? That's a 61.8 retracement. That's usually the target for a correction. However, I like to keep in mind those darn market makers, okay? They know that we are going to be paying attention to that level, okay? If they understand Elliott wave theory, which I'm pretty confident they do, okay? So it's high chance that they push it even lower, which brings me to this support level right here and this area of liquidity down here, okay? So for me, if I was looking to enter and be bullish and bet to the upside, I would wait for Amazon to come back down to back under 3,400, right, to this area right here around the 33 to 3,400 level. Okay, that's where the area I would look to enter if I'm going to bet to the downside. As of right now, you may or may not like this, but it's looking pretty bearish to me, trading under the 20-day moving average. As you can see, 50-day moving average is lower. It's very close actually to the 61.8 retracement. So yeah, there's a chance that Amazon does drop to the 50-day moving average, and like I always say, I like to enter just below the moving average. And what else happens to be just below the moving average? The 61.8 retracement. Okay, so keep an eye. 3429.56 all the way down to 33.35. Okay, that's the buys. But yeah, I'm pretty bearish on Amazon right now, and yeah, that's the buy zone. 34.29 all the way down to 33.50. Okay, I think I just changed the range, but yeah, I think you guys get what I'm trying to say. Okay, around here. So basically, bottom line, bearish on Amazon. Moving on to Apple. Okay, now you look at this, right? Look at this chart of Apple. Looks great, doesn't it? We got higher lows coming in. We got higher highs. Looking like an awesome bear market. Bull market. Okay, bull market. But here's something I want you to consider. I want you to consider this. All this that I brought up. What is this? This is the Wyckoff distribution. Okay, let's go to Wyckoff distribution. That's accumulation. Here's distribution. Distribution number 1. Okay, it looks very similar to Apple right now. It really does. Okay, looks very similar, and we are at the UTAD phase. Now remember, when we get to the UTAD phase, a sign that we have reached a top is choppiness. Okay, see the choppiness? Get the top, then come down to the BC level. You get a bounce back up, got a lower high, and then next comes a lower low. Okay, it's gonna get choppy over here for the test. It's possible that Apple is in the test range, is in the test phase. Now keep in mind and remember that it's not going to be 100% with Wyckoff. Wyckoff is more like a general idea. Now this looks like a double top, and it's gonna be a pool of area of liquidity up here. Now that's possible, but keep in mind that the high of this candle is 150 and the high of this candle is 149.83. Not much of a difference, but nonetheless, this was a high and this was a lower high. Okay, and it came down here past the UT level. It didn't get as low as the BC level, but like I said, it's not going to be 100% with Wyckoff. So what I want to watch out for, because there's a chance that Apple does go up higher to the 150 range and take out this area of liquidity. But if we're going to get a lower high followed by a lower low, that's a good sign that we're going to get a nice drop. Okay, now we got this nice support line all the way down here with the area of liquidity all the way down here. If you want, and you want to take a low risk entry, of course that area would be a low risk entry. Okay, but keep in mind, let me bring up the moving average. This is a bull market. Okay, this is a strong bull market, and all our moving averages are stacked on top of each other, although Apple is trading below the 5 as well as the 13, but it's still dropped to the 20-day moving average, tricked the bears here, closed above. Today it tricked us a little bit, the bears. I'm not a bear, but it tricked the bears a little bit here, got under the 20-day and closed above. Okay, that's a bit bullish close. Okay, so as long as it stays above the 20 and is bouncing off the 20-day moving average, it's pretty bullish. All right, so yes, wick off and all that good stuff is showing up on our radar, but it doesn't mean it has to follow through 100% right now. We are in the UTAD phase where we are expecting Apple to go very high, but it doesn't mean it has to top out right here, although this does look like a double top. Okay, so we want to keep on watching. Will SPY get back above our 5-day moving average? We'll see what happens if they'll take out this area of liquidity, but if it fails and continues to fail like it did the past 2 days, could be a sign that we're going to head to lower lows. Okay, keep in mind we have this area imbalance here. Okay, so yeah, July is a very green month for stocks like Apple, indices like QQQ, but from August, September, October is usually a bearish season. Okay, and Apple, keep in mind, is a market moving stock. Okay, it's very heavy in the SPY, it's heavy on the QQQ. All right, so whatever you do, just be careful. I am bullish on the Apple right now, but if it fails to get back above 147 and close above 147, I'm gonna turn to bearish, and I'll probably look to accumulate down here. But keep in mind this scenario wick off. Okay, so if it comes down to our support, this could be the last point of supply, and then it continue to drop. Who knows? I'm not a fortune teller, but like I said, this is a bull market. Stay bullish until further notice. Okay, so I hope that was able to help you. Hope that was able to keep you calm. I hope I was able to bring some value to your day. Continue to beat this market, and I'll see you soon.